Right now, as the market is live, shares of Unusual Machines Inc., trading under the ticker UMAC, are at $14.05. That's a very slight move, up just 4 cents or 0.29% for the day. And this is exactly where the surface-level story stops and the real analysis begins. The expectation, when you see a price that's barely green, is that this is a sleepy, forgotten stock. But the reality is that this $14.05 price is a temporary ceasefire in an absolute war zone. What you're not seeing in that simple daily percentage is the volatility that has defined this name for the last week. This isn't a stock drifting. It's a stock trying to find its footing after an explosive move and a brutal rejection. Just yesterday, this stock closed at $14.01, but only after trading in a range between $15.47 and $13.80. The day before that, it saw a staggering 16 million shares trade hands. So today's volume of about 1.15 million shares, while still heavy for a company this size, represents a significant cooling off. The stock gapped down at this morning's open to $14.19, immediately sold off to a low of $13.45, and has since spent the last hour and a half clawing its way back to this $14.05 level. This is not a chart for the faint of heart. This is not the kind of holding you'd find in a diversified Schwab Intelligent Portfolios account. This is a battleground stock, and the fight is between two very distinct narratives. The common belief about Unusual Machines is that it's just another small speculative company in the drone space. Many investors, especially those using the Robinhood app or the SoFi active investing platform, see it as a hobbyist company. They're not entirely wrong. The company made a name for itself by acquiring FPV market leader Fat Shark, which makes those low-latency video goggles for drone pilots, and Rotor Riot, a major e-commerce marketplace for the FPV, first-person view, community. For many, UMAC is simply a consumer-facing e-commerce play, a bet on the growing FPV hobby. They look at the financials, see a trailing 12-month earnings per share of negative $3.52, and they see a company that's burning through cash. They see a high price-to-sales ratio and assume it's just another high-growth, no-profit story that could collapse the second the market turns sour. This is the expectation, a high-risk, high-reward gamble on a niche consumer trend. But that entire perspective misses the elephant in the room. It misses the reason this stock has seen days with 16 million shares in volume. The reality is that the consumer-facing business is rapidly becoming the secondary story, the real narrative, the one that has institutional desks at places like Fidelity and Interactive Brokers suddenly paying very close attention, is UMAC's aggressive and strategic pivot into a U.S.-based high-security defense contractor. This is the deeper take that changes the entire valuation. What the market is trying to price in right now is the string of news that confirms this pivot. Just this morning, news broke that UMAC has clinched its largest contract to date, providing critical drone components for the U.S. Army's Rapid Reconfigurable Systems line. This isn't a small test order. This is a significant win that places them directly in the Department of Defense supply chain. This comes on the heels of the company expanding with a new motor factory in Florida and acquiring Rotor Lab. Why is this so important? Because of 3 letters. NDAA. The National Defense Authorization Act effectively bans the use of Chinese drones and components in U.S. government and military applications. For years, this market was dominated by Chinese suppliers. Now there is a massive, urgent vacuum for American-made, secure, NDAA-compliant components, and UMAC has positioned itself as one of the few pure-play suppliers ready to fill that void. This isn't a hobbyist company anymore. It's a bet on the reshoring of a critical defense supply chain. Let's look at the recent trading action through this new lens. The explosive volume we saw on October 24th and 27th, where the stock ripped from under $12 to over $16, wasn't just retail speculation. That was the market digesting this new reality. That was the re-rating happening in real time. The 7.4% drop yesterday was predictable profit-taking. After a run like that, many traders who bought in at $12 are going to sell. Today's intraday fight, that dip to $13.45 and the climb back to $14.05, is the new line in the sand. This is where long-term investors who believe the defense story are battling the short-term traders who are happy with their gains. The volume, while lower than the peak, remains well above its average, showing that interest is still incredibly high. This isn't like looking at the chart for Tesla stock or Apple stock, which are driven by massive established revenue streams. This is a story of future potential. The current price-to-sales ratio of nearly 27 is, by any traditional metric, extremely high. The negative return on equity is alarming, but the market is not trading on last quarter's numbers. It's trading on the U.S. Army contracts. It's trading on the fact that global defense spending is at its highest point since the Cold War, and that the U.S. drone market is projected to grow to over $160 billion by 2030. The market is betting that UMAC's revenue, which already jumped 51% in the last reported quarter, is about to experience another significant acceleration. This is where the analyst community is placing its bets. We have 9 analysts covering this stock, which is a lot for a company this size, and the consensus is a strong buy. Needham recently reiterated their buy rating, and Zacks has highlighted the stock, noting that earnings estimates for the coming quarter have been revised upward by a massive 71.4% over the past 30 days. This is a powerful indicator. It tells you that the people whose job it is to model this company's future are scrambling to increase their forecasts to keep up with the new contract wins. Their average price target sits at around $17.34, with some high-end targets reaching $20 or even $25. This shows a clear disconnect. The analysts believe the stock has significant room to run, even after its recent surge, while the intraday chart shows a fierce debate. This is the kind of setup that professional traders look for. They are using their interactive broker's trading platform to analyze the Level 2 order book, trying to see if the buy side or sell side is thicker at key levels. This isn't a simple self-investing play. It's a dynamic situation. So, what exactly does Unusual Machines do? As we touched on, it's a dual-track strategy. On one side, you have the legacy consumer business through Rotor Riot and Fat Shark. This is a sticky, high-margin e-commerce business that gives them a strong foundation in the FPV community. It generates cash and, just as importantly, provides a proving ground for their technology and a deep connection to the most advanced drone pilots in the world. On the other, more important side is the enterprise and defense segment. They are leveraging their expertise in drone components, motors, video transmitters, goggles, to build American-made secure products for industries that cannot risk using foreign-made parts. This includes defense, public safety, energy, and agriculture. The new Florida factory is central to this plan because it will allow them to vertically integrate and scale up production of these critical NDAA-compliant components. This is why their recent SEC filings, the 8Ks filed in October, have been so important. They detail these strategic moves, and any serious investor should be reading them. This isn't something you'll just get from the basic Robinhood Investments interface. It requires a bit more research, perhaps using the tools on the Fidelity mobile app, or looking at their full Fidelity brokers reports. This brings us to the future outlook, and it's all about expectation versus reality. The widespread expectation is that UMAC is just a lottery ticket. It's a binary bet. It will either be a 10-bagger or it will go to zero. It's seen as too volatile for a long-term investment, maybe just a trade. But the reality is more complex. The future here hinges on one word: execution. The bull case is clear. UMAC is in the right place at the right time. They have the technology, the U.S. manufacturing footprint, and the initial government contracts. The tailwind of U.S. defense policy is enormous. If they can successfully scale that Florida factory, continue to win larger and larger defense contracts, and translate their 51% revenue growth into an actual path to profitability, the current $14 share price will look incredibly cheap in hindsight. The analyst target of $25 won't just be possible, it could be conservative. The company has a clear line of sight to a massive protected market. But the bear case is just as real. This is still a small company that is burning cash. The stock is a volatile instrument, as we've seen this past week. The risks are significant. First, there's procurement risk. Government contracts are notorious for delays. A major program award getting pushed back by 2 quarters could cause the market to lose faith. Second, there's execution risk. Building a new factory and scaling manufacturing is incredibly difficult. Any delays or quality control issues could be disastrous. Third, there's market risk. We are in a tricky macroeconomic environment. If the broader market enters a risk-off phase, high-growth, non-profitable companies like UMAC are often the first to be sold, regardless of their individual story. Investors might flee to the perceived safety of blue-chip names like NVIDIA stock or broad fidelity ETFs. This is not a stock for someone who wants to invest online passively. It requires active monitoring.